This is HFO's Multifamily Marketwatch, presented by Pacific Exteriors Northwest, a contractor specializing in siding and exterior envelopes, delivering exceptional quality and service for over 30 years. By Aprio, combining DeLapp's Pacific Northwest experience with Aprio's global resources to offer unparalleled tax, wealth management, and advisory services for real estate owners. And by Kennedy Restoration, helping residential and business owners recover from fire, water, mold, and storm damage.
Welcome back to Multifamily Marketwatch. I'm Greg Frick, partner at HFO Investment Real Estate. Today we have with us Arie van Gemeren from Lombard Equities. Arie, I know you spoke at Multifamily Northwest event a couple of weeks ago. I thought I'd bring you in and we could talk a little bit more in depth, because I know that was kind of a quick deal, but
Sure, yeah.
Great for joining in. Good to always see you again. Like I said, we've done a number of transactions over the years. One of the questions that came up was, on market timing and things like that. And the panel question was, somebody asked, are we at the bottom? And I think your answer was something along the lines of, does it matter?
Right.
Give me some of the thought on that kind of answer.
Yeah, I mean, look, I come from a stock market research background.
Right.
So when you look at the S&P 500, and I'm going to relate this to real estate in a moment, but when you look at the S&P 500, if you bought in 2009 and there was more time to go down on the S&P, but you're a long-term investor, does it matter?
Exactly.
Who cares? Can you time the market bottom? Do you know exactly when it's going to hit? I mean, I think some of the brightest minds in human history have tried to figure that out, and they can't figure it out. So, the concern is always, I'm buying a falling knife. I'm going to catch this thing, and I'm going to get my, for lack of a better word, I'm going to get my face ripped off by the deal. But that's where the debt comes in. So if you think the market has good legs under it, you think the future is bright for the market, does it matter if it goes down 10% more today if you're locking in 7 to 10-year debt on a deal? If I'm taking a 3-year loan, which I've learned over the last couple of years that I'll never do again.
Which there was a lot of that. I mean, in the go-go days of 2021, 22, there was a lot of short-term debt, bridge debt, and those are the ones I think are in trouble. But I think you're saying is if you've got a long-term horizon, trying to time the bottom is so difficult. It's easy to do once we're coming up, but not in the throes of it.
Yeah, I think if you buy a building today and you have a good basis on it, and you have a good management team, and you're a good asset manager, and you run the asset well, and you have 7 to 10-year debt, it's a pretty good bet that you're going to be okay in 7 to 10 years, right? And you're going to get all the tax benefits. You're going to see the market rent appreciation that I'm pretty sure is coming on rents and probably on building pricing as well. So I think we're close to the bottom, and I said that at the conference we were at together, but I guess my thought is I don't know that it matters if you have a long-term investment horizon in the first place, right?
Right.
Now, obviously, you don't want to buy too high and then see prices come down 50%, but prices are already down 50%, right? I mean, we're already in the vintage of building we buy, right? And we've done many deals with you guys, but we're buying pre-World War II kind of vintage assets. We're looking at some 60s and 70s deals. The price drop since 22, 23 is dramatic. I mean, it's in some cases, it's 50%. Is it going to go down more? It might, but I feel like most of that has already happened. And so now I think you're starting to capture the upswing in the market. And we're seeing it across the Pacific Northwest because we invest in Seattle, Tacoma, Portland, and obviously Northern California as well. And in every single market, it feels like we're kind of reaching a bottom.
Join the HFO community and get weekly multifamily intel. Click to subscribe.
And are you seeing that in those markets? Is it that vintage property, urban brickers, which had the biggest, which I think a lot of it has to do with it's kind of the softness of the service industry as we're coming out of COVID,
sure, coupled
with the expense structure on some of those deals because of the age and vintage. Are you seeing that across Seattle, Portland?
Yeah. I mean, cap rates are materially wide in Seattle and Portland versus where they were. I mean, Seattle was a sub 5 cap market on this kind of building. And we've, the last couple of deals we've done, I'd argue are high 6s or low 7 caps, right?
Okay.
In Seattle proper. In Portland, we're seeing 7, sometimes up to 9 caps on those vintage buildings. Now, there's a lot of risk with the thesis, and I can go into that. But yes, I think you basically have a confluence of factors, right? You have insurance has gone crazy, and these older buildings have really been hit by the insurance issues. You have a weakness in the tenant demographic that rents there, right? So you're dealing with service workers or gig economy workers or people that are a little more credit sensitive. So there's a lot of reticence to get into that. You have concerns around seismic retrofitting, earthquake reinforcement, and expenses have skyrocketed in those assets. So that's partially why you've seen this huge drawdown. What we've seen, though, is lately we're one of the only parties bidding on them. That's where we think the opportunity is.
Right. And do you think you'll see kind of some of that expense structure? I mean, I've seen some of it on the insurance side. We did have the big run up. I mean, I'm not going to say they're going to go down, but maybe we don't see, 20, 30, 40% increase on an annual basis, which is, maybe that tapers back to a normal. Do you guys see that in your portfolio? Is it too early for that yet?
Yeah, we're starting to see it. I mean, insurance premiums have definitely come down. I mean, I did a LinkedIn survey of professionals on LinkedIn, and we got over 100 responses on the survey. And, the majority of people felt like insurance was improving.
Okay.
So that was a broad survey of real estate and insurance professionals via our network. We're seeing it in our own portfolio. We are seeing premiums start to come down. We're starting to see some insurers come back into the market, which is very typical in insurance, right? Insurance is like any market. It goes through hard cycles and soft cycles. We're coming out of one of the hardest cycles imaginable, right? And it's ironic because if you look at our portfolio, we've probably paid $1.2 million to $1.5 million in premium over the last 5 years, and I think we've had $60,000 in claims. So it's like $1.4 million in profit for the insurance company. We haven't had any claims,
right.
Very minimal claims. Yeah. And that's juicy, right? And those premiums have gone up. But then what happens, and inevitably, and it happens over the course of history over and over again, is insurance companies see somebody's printing money and they start to come back into the market.
New players come into the market.
And we're starting to see that. I mean, from the operations standpoint, there is a trend towards self-management. So I've been here. We recently launched an in-house management company.
Right, I was going to talk to you. Yes.
Partially just to control cost. Partially because I think a lot of the third-party management business is struggling at the moment. But I guess my point I want to make is not necessarily that we did it, but I've also heard independently from maybe 5 other operators who have called me and been like, how'd you do it? I'm interested in doing it. I also want to do that. Because I think people are recognizing that in this environment, controlling the OpEx is critical. And the person that controls the OpEx is your management company, right? They're the ones that are bidding everything out. They're the ones that are dealing with things on a timely basis. And there is a trend I'm noticing towards this. And what's interesting is all the big players, right? The major REITs, the major players, they have had in-house management forever, right? Many of them have their own.
It's funny, they'll vacillate. Sometimes they'll go in-house, then at some point
they'll go back and forth.
They'll go back and forth, and you used to see it when times were tight. Well, as we always say, when things kind of get a little rougher in the business, everybody gets into the asset management mode.
Right.
And that's when they start peeling the onion a little deeper,
Yep.
and then they start, hey, we'll take this in-house.
Right.
Then when it's, quote, easier to manage or perception,
They pass it back.
They'll pass it back, and that's exactly what we saw as well. Yeah.
Well, and I think what's different this time is you're seeing more smaller operators like myself, right? People that own under 1,000 units, starting to say, well, why can't we do this, right? I want to be in it myself. And our experience running our own management company has been tremendous, right? I mean, leasing is better, delinquency management is better, cost control is better, and it's not like we have a magic ingredient. It's just that, to quote kind of a trite real estate comment, nobody cares about your buildings the way you care about your buildings, right? So if you're managing your own asset, you really care. It's really important. And if you invest investor money, it's really, really important that it does well. And so I think there's a number of trends that are coalescing around expense control, management of residents. I mean, the other piece of the in-house management function is, for years, it was really easy to run real estate assets. Rents were rising. It was a seller's market, right?
Well, it was an operator's market. I mean, when you've got rent growth that's going at, some years double digits.
Yep.
I mean, it's quite, you don't
have to do anything.
No, the vacancy comes, you get it ready, and you got tenants lined up to go in there. Yeah.
And the trend that's happening right now, and that I've been highly fixated on, and I think people in this business lose sight of it a little bit, is at its core, this is a service business to our residents. Right?
Most definitely.
That is what we do. We provide a service, which is housing. People pay us a fair rate for that service, and they expect something with that service. Right. And we've noticed, there's some management companies are great at this, some are not good at it. We've noticed a trend that when management companies are not attentive to the residents and they're not answering their questions quickly, and when you're not managing it yourself, you can't control that, there is an inevitable increase in turnover, vacancy loss, delinquency loss. And so part of the thought process on going in-house was, people, the argument against it is always like, oh, you don't want to buy yourself a job. You don't want to create a job for yourself, but it is my job to make sure our buildings are full and that our residents are happy and that they're paying rent. And it's an incredible experience to actually meet my residents, talk to them. It's not something I can do all the time, but that's the piece that I think is the most missing piece with many management companies.
So with that, I'd say access with dealing with the tenant now and seeing that, has that changed your thought on investments as to what you would or would not do? Because, you're asset managing to the extreme, or it's, you're not up here, you're actually down in
yeah.
Is it something enlightened like, hey, wow, now I would look at this kind of project differently?
It certainly made me more shy of studio heavy projects.
Okay.
I think in the go-go days, it was like studios were great, right? You have a higher rent per square foot, you put more boxes in a building, you can rent it for more, it looks great. Being on the front lines and dealing with residents, you start to recognize that that's a difficult demographic, right? And that's a much needier and more intensive demographic. So you start to really think about what's the type of unit count? What am I dealing with in this building? So from that perspective, yes. I think it's been really interesting to, shake hands with and meet residents. we've tried this new thing where our team meets with residents on site. We do a pizza party, we get to know them. And it was interesting. The general feedback was this is amazing. We've never met anyone from the management company. No one's ever been here to meet us in person. People are also...
Because again, a lot of your buildings don't have an on-site.
They don't have an on-site.
When you're in an old vintage, property under 100 units.
Correct.
You don't have a leasing office and on-site, so...
Correct. So their association with the management company is, I get a notice in the mail when I'm late. They send out a blast. I don't know who this person is.
Right.
The person turns over every 3 months. And when I went, it was interesting because I always shied away from this experience, but I would say I'm the owner. And, they'd be like, oh, wow. They never meet the owner. Never, right? Yeah. Unless you're one of the, the old school guys here in town that have always managed their own assets, of which we know several in common. But it was interesting because, on one hand, they were like, this is amazing. Thank you for coming by. It's really nice to meet you. And then they would be like, and why'd you raise my rent?
Yeah.
And it was interesting because we have buildings where we've gone from no utility billbacks to utility billbacks, and so the cost burden for the residents has risen. And it was interesting. There was a room of people, and somebody was like, "Hey, you really increased our rents over the last 3 years." And it was interesting. That was the question. I was why I didn't want to meet with them, because you kind of want to be behind the curtains and be like, nobody knows who I am. Let someone else take the responsibility. But I willingly stepped into the arena, and my response was basically hey, I don't know if you're aware, but insurance premiums have gone up 3 to 4x over this time. Labor costs have gone up this much. Running this building is not free. And this isn't we are going to do our best to provide service for you, but this is not a nonprofit business.
There is a cost to run these businesses.
Running this asset is expensive.
Yes.
Providing a nice living place for you is expensive, and the costs have gone up. I'm sorry. And they were very receptive to that. They're like, okay, thanks.
Yeah.
So, but that sort of and it's a difficult equation because in the interest of scaling a business, it's not really a scalable model, but maintaining resident relations, keeping people in the building, keeping them to accept renewals, to keep rent increases, to speak positively of your building, to provide good Google reviews of your building, all of that is incredibly beneficial to your leasing activity in the first place. So it's not scalable. But I feel the trick is to pursue scalable with the non-scalable activities. And those are the things that we are really trying to ingrain in our own team,
right.
Our management company, is the residents are our clients.
Right. So as you bring people into your team, that's the mantra going in. And so it's kind of comes all the way down from the top, which which is a big difference. Like you said, nobody cares as much as you do. And it is a service business, which I think COVID brought kind of, we're all going to go remote and we're all going to do this and we're going to lease, and there was no communication. We saw a huge difference on the properties that had, delivered service or had a rapport with the tenants, had a lot less issues from delinquents or just working with the tenant than the ones that was so remotely. So I think you're on a good path for that side, for sure.
Yeah.
Tell me a little bit about, managing for profit versus for an investor. You'll be able to look at it from the investor standpoint. I mean, at the end of the day, it's just asset management and services for the tenant. As you scale, is there something you would change on that? Or again, it's just bringing in people to handle that?
Yeah, I think as we scale, I mean, the focus is to hire people that are good cultural fits. It's interesting too, because, we work with many third-party management companies.
Right.
And I know all their presidents and the heads of them. And, they all agree at face value that serving residents is the business, right? And some get it more, some get it less. There's a trend in property management to try to use AI for everything, right? And
not just property management.
yeah, right. That's true. across
I got to hear another thing about AI, this, that,
across every industry.
Yes.
But I think in management particularly, it's risky because if you don't solve, like the people that run your business and run your management company are the foundation of a successful business, right? And I've had experiences where I text residents and their reply is this a bot? So residents are getting used to having to communicate with bots. And by the way, not just residents, all of us are getting used to it. I mean, we use Appfolio, for example. I can't get a live person on the phone to save my life. I have to communicate with their bot for everything, and I hate it. Now, I understand from their perspective it's a cost savings, but from a user experience, it's terrible. Right. Now, talk about someone that, this is a significant portion of their income every month that goes to you, and then you layer in AI and all these things, which I get the business impetus of why. My pushback would be, if your foundation, you don't have the right people, you can't just throw AI at the problem and try to solve it. You need to hire the right people. So, like for example, we just built our own in-house maintenance team. And one of the first conversations I had with the guys when they came on was, listen, your job is to take care of our residents. That's your job, right? And I explained it because I think in anything in life, it's like you can tell people like this is your job, but you also have to explain why it's important so they get it.
The connection.
And I said, the reason it's important is if service requests go unanswered, if a resident has a leaky faucet and we don't get back to them for 7 days, they remember that. And when it comes time for renewal, they might leave because they're like, this company doesn't take care of me. So it's like, your job is to make our residents feel taken care of.
Heard and
taken care of, and you're on top of it. If it takes a couple days extra, that's okay. Make sure you're communicative. They understand what's happening. So, and it gets harder when your company gets bigger, right? We're still a small company. So it's easy to control culture. And I empathize that it's really difficult when you have a big company and you have a lot of people, there's going to be bad apples in the bunch, right? And so, but getting the people piece right, and then layering AI and technology and all this stuff to buttress and support the people is great. That's where we are in the industry, right? And I think a lot of management companies recognize that. They're starting to make that move. But it's, again, why I see a trend of smaller operators going in-house, because they're like, it hasn't been a good experience for me. And many of them, on that note, don't own big enough buildings to have an on-site team. Yeah. So you're highly reliant on, like, what does the communication look like with my residents from a team that's not on-site and may never go on-site, right? And
who's watching my building? Who's
watching
I don't
my
have
building? Somebody
living there. I don't have an office on site. It's centralized leasing. How does that work? And yes, and they see the cost going up, and there's just a recognition of who's really minding the store, so to speak.
Yeah, and it's empowering. I mean, we just bought a building, and I live a minute away, which is kind of our investment thesis, is to buy kind of close to where we live and where our office is, so we can really monitor them. But I was driving home from the gym one day, and I drove by, and there was graffiti on the front. And I turned around, and I went myself to Ace. I picked up the stuff. I went back to the building, and I cleaned it up immediately because I was like, I don't want these residents to think we're not caring for this building. Right. Funny story, as I was cleaning the graffiti, somebody was honking frantically at me, like honking, and I was in the dark kind of like cleaning off the graffiti. So finally I went up to the gentleman in the car, and I was like, do we have a problem? And he's like, what are you doing tagging our building? Like, why are you putting graffiti on our building? And I was like, I'm not putting graffiti on the building. I'm taking it off. And he was like, oh, I'm a resident of this building. Like, oh, I'm so sorry. I'm sorry. Like, I really appreciate you doing that. And I was like, this guy's going places. Like, he cares about a building that he rents. And he's like, don't mess with my building.
Well, that's a tenant you want to keep.
That's a tenant we want to keep. Yeah. And I was like, that's great. And so we like reached out to him afterwards. We sent him some, gifts or whatever. it was a cool experience. But the point is, like, the self-management piece, or just monitoring your assets in general, is like, that's the benefit, right? You start to build those relationships.
So now, having the experiences that you've had for a smaller owner, I mean, who can't justify going in-house, what do you think they should be demanding from their or what matrix should they be looking at as they're trying to get a better handle? Because like I said, when things are going gangbusters, asset management's not really, they're just looking at the top line, or rent's going up great, but the market's different. What do you say to those people?
Look, I think it's tough. It's tough.
Yeah.
I think there's so much impetus in this business to scale, not buy yourself a job. And I've kind of hit on that point multiple times. I think if I had to identify like what an asset manager / owner can do to manage a management company better, you got to really understand what they do, right? And if you've never managed a building, you don't really know what they do. Not really, not at a fundamental basis, like a first principles basis. Like, how does the leasing, how does your unit get to Zillow or Facebook Marketplace, which is another thing that none of the big companies can do for you, right? But we use Facebook Marketplace. It's an unbelievable leasing resource. Many companies won't even use it. But how does it even, what is the timeline or the process for a unit that's vacant to get turned, cleaned, and then listed? And then do you understand how the leads flow back and forth? I can't tell you the number of times with third-party managers that we found out that the linkage between Zillow and Appfolio had broken, and they were like, we're not getting any leads. And then I'm like, can you log into Zillow and tell me what you're seeing for leads? Oh, there's 30 leads here. And you're like, oh, yeah, right. So we are getting leads. You're just not.
It's just not talking. Yeah.
But do you understand how that works, right? Do you understand how work orders are processed? How are the main, I guess I would, to summarize it briefly, like if you're a smaller owner and you're working with a third-party manager, like I would ask to embed with the management company for like a week just to understand how everything works. Because you really can't asset manage if you don't even understand what they're doing. Do you understand how the evictions process works? Do you understand what a 10-day notice is versus a 30-day notice, or whatever the different pieces are? How does that work to then go to the court system, and then what it looks like at that point? Without doing it, it's hard to understand it, and it's hard to asset manage it. But I mean, the simple one, the simple KPIs are like, what's the speed with which you respond to guests that want to look at your unit, right? That's a very simple one, and we see it all the time.
Especially for centralized leasing.
Yes, and we see it all the time where it's like, oh, it's been 7 days and no one's responded, and that person is gone.
Right.
Like I would argue like 5 hours to get back to them.
When they're looking, that's when they're ready to go.
They're ready to go at that moment, and if you miss it, you miss it. Understanding how payroll flows down to your property, but the whole premise of what I'm saying is like granularly understand how the business works, because I think there was a tendency, as we talked about, when the market was good, you didn't pay any attention to it because everything was fine, right? Now we're in a choppy, kind of turbulent market with wild expense fluctuations and a lot of stuff happening. Now's the time to get back to fundamentals and like really understand how it works, because the management company is not an outsourced vendor for you to just hand it off to. It is like the most important part of your business.
Oh, for sure.
The most important.
I mean, they're the ones interacting with the customer.
They're doing everything, right? And if they do a poor job, your investment is going to go down.
It's like being a store owner, but all your employees are not doing a good job, and then you wonder why the customers don't come back.
Right. It's like, take that analogy further, it's like being a store owner and outsourcing the employee component and not paying any attention to it, and then wondering why the store is not doing well, right? Yeah. And it's like, oh, because you have turnover and everyone's leaving constantly and there's theft, and you got to get into the details.
Yeah. Which is funny because we brought that up even with this interview before about trying to educate policymakers on the details of management and the process they go through, either to get tenants in, out, whatever it may be. And when they're making policy and not understanding the nuance of it, you just end up, you're just fighting this. It's kind of nuts. But
yeah, couldn't agree more.
Yeah. Well, thank you for taking the time to do this. It was always great. We'll do it again soon. And we'll see you again next time on Multifamily Marketwatch. Thank you.
Thank you, Greg.
Thanks.
HFO's entire office specializes in multifamily real estate, making us the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Like and subscribe to Multifamily Marketwatch videos on YouTube, articles on LinkedIn, and podcasts on all major streaming markets. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information. HFO is a partner of the Global Real Estate Advisor Network.
Love the insights? Tap the like button and click subscribe. It helps us bring more multifamily news straight to you.